Critical Stocks Monitor turns on a heavy earnings week, putting AMD, Disney, and Roblox under scrutiny. The immediate tension is simple. A major earnings week puts AMD, Apple, Broadcom, Disney, and Roblox at the center of market attention. That matters because equity traders and crypto macro watchers use these reports to gauge risk appetite across technology and consumer assets. The opening read is not a prediction. It is a map of the pressure point, the affected side, and the first signal that can confirm whether the move has substance. For this story, the useful starting question is whether the headline changes access, risk, or timing for real market participants. The first practical read is, 5 stocks anchor the earnings week. The confirmed baseline is narrower than the reaction around it. AMD reports after the May 5 close, Disney reports on May 6, and Roblox already lowered bookings guidance. That gives viewers the frame for the rest of the segment. What is actually on the table, what actor is involved, and which part of the market has to respond. A clean baseline also keeps the story from turning into guesswork. The strongest facts here are the event, the timing or level attached to it, and the practical constraint that follows from those details. In this case, that constraint is concrete. AMD and Disney are the timed reports. It gives the card a factual anchor before the mechanism seen. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Critical Stocks Monitor, the mechanism matters more than the headline. Earnings calls translate narratives like AI demand, streaming margins, and safety costs into measurable revenue signals. In plain English, the mechanism is the part of the story that decides whether this becomes a real change or only a temporary reaction. When liquidity, rules, access, supply, custody, security, or policy process is the driver, the surface move can look simple while the real pressure sits underneath. That is why this scene tracks the operating lever, not just the name attached to the news. The mechanism is easier to follow when it is reduced to one line: earnings turn narratives into numbers. The impact falls on the people and systems closest to that lever. Equity traders and crypto macro watchers use these reports to gauge risk appetite across technology and consumer assets. The practical consequence is not the same for every viewer. Some see a trading level, some see a compliance deadline, and others see a product or infrastructure risk. The useful distinction is who has to act, who has to wait, and who is exposed if the next confirmation does not arrive. That separates real effect from broad market noise. The affected side is not abstract here. Risk appetite can move with tech results. The unresolved part should stay separate from the confirmed part. Strong results from one company will not prove the entire AI or consumer trade is healthy. That does not cancel the story, but it does limit how far the conclusion can go. The mistake would be treating attention, filings, forecasts, claims, support zones, or policy comments as proof of an outcome. The better read is to keep the confirmed fact in one column and the missing confirmation in another. The guardrail for viewers is, one report cannot prove a full sector. That keeps speculation from becoming the main claim. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The watch point for Critical Stocks Monitor is specific. The next signals are AMD data center commentary, Disney streaming profitability, and Roblox user stabilization. If that signal appears, the story moves from setup toward follow-through. If it does not, the market has to keep pricing uncertainty instead of certainty. For viewers, the useful close is this: track the next public step, the next liquidity signal, the next official action, or the next verified product detail before treating the move as settled. The final monitor is story-specific. AI demand and users are the signals.